Hi guys, how are you? Hi Franco. I have
Hi.
my guest today, Franco Montano, right? That's how you say
Yeah.
your last name.
Yeah. Correct. Yeah.
So
Montano.
he is the authority on co-living, or you call it co-housing,
Or co-housing.
right?
Yeah. Yeah. That's
So
the term that's getting a lot of traction right now. Co-housing.
I know, isn't it
Yeah.
crazy? Like, but
It
tell
is.
people. I mean, first of all, I want to see who are you
Yeah.
to just let people know, give a little bit about, and how you got in real estate.
Yeah.
And then we are going to be talking all about co-living. Why
Yeah.
do co-living? So
Yeah.
take it
Definitely.
away. Yes. Tell me
Sounds
what
good. Sounds good.
your
So
bio.
a little bit about me is I've done a little bit of everything. So I've had businesses in about 14 going on 15 industries now. I have started a new company, so about 15 different industries now, so everything from retail to financial services to outsourcing. I had a call center, so now I know outsourcing is really popular now. I got into that industry 18 years ago, so I had a large call center, did that. I had over 300 agents, did that for many years, as
Wow.
well as much of any of this, and I owned three different franchise brands. So
You still
one a couple
own? Or you still
so
own
I
it?
sold them. I sold my
Ah,
last one that I owned. So one I started when I was 20 years old. It was 7-Eleven. I was one of their youngest 7-Eleven franchisees when I was 20. My
wow.
my last franchise that I owned was T-Mobile, and so I sold that business in 2018. I had 42 locations here in California, and I had 750 employees. So that was one of my larger businesses that I run. I did that for 11 years. And my idea is when I sold that. So how I found my way into real estate is it's really interesting. Was like, so when I sold that business in 2018, and I thought my next transition was to find another company, right? Because I love the
Yeah.
challenge and I love learning new industries. I love that. And so I looked at several different companies, and I came really close to buying a tour bus company, and I got very lucky that I didn't end up buying it because that would have been a very big problem. But I did during COVID, right? But I almost bought a tour bus company in Las Vegas, and what ended up happening was during this time is I sold a couple properties, and and it's a really interesting story. And so while I was doing my cell phone business, I bought my primary residence, of course, and I bought a little like vacation property that I put on Airbnb here in
Okay.
California, up in the
That's
mountains. And
2018. Is that 2018
I
or
bought it
around
around.
that?
So my primary I got in 2011, and then my Airbnb I got it in 2015, right? So I
Ooh, the
sold.
very
So
when we
I
start.
thought, yeah, and so which was great time, and
Yeah.
so I sold it around the same time. I sold both of them during 2018. So at the same time I was selling my company, I figured, I sell because I wanted to get a new primary residence. And so really interesting story why I kind of, and this is kind of what got me to thinking about real estate was, so first my Airbnb, I bought it with a second home loan, right? So you could put 10% down, low down payment. And one of the great things about real estate is leverage, right? That's where you, like, if you use leverage correctly, right? You could use it the wrong
Right.
way, but if you use it the
Correct.
right way, right, it could magnify your returns quite a bit. And so I put 10%. I bought this house for 320,000, right? So I put 10% down, around $32,000 plus some closing costs. And I sold that property, and it was great as an Airbnb. I sold it 3 years later, right, in 2018, for 650,000, right?
Wow.
So I'm like, wow. So like, okay, I put $32,000 in this thing, and I sold it for, I made like over 10x, like over 1,000% return in three
Where
years.
was it? Like
This
what
was in
what state?
Big Bear, California.
Okay, so
Yeah,
California. And you
up in
live
the
in
mountains.
California too.
I
Oh
live
my
in
god,
California. Yeah,
beautiful.
yeah. And so I sold that, and then at the same time, I also sold my primary residence. Now, when I bought my primary residence, because I always wanted to, I'm always looking to ways to make money on my return. So even when I bought my primary residence, I was really looking what was the next step, right? I just didn't buy a house. So I bought this house in 2011. Um, it was zoned multifamily. Okay, from the very beginning, it had a small 1920s house on it, and my intention at the time was I knew one day I was gonna, upgrade, go to a different property. And so I was going to redevelop this property. That was my plan. And so it was in a
Okay.
decent sized lot, here for decent size for LA. So this was like 10,000 square foot lot. So in LA, I'm able to build uh, that it's zoned for do small apartment building or townhouses or something like that. So when I decided that I wanted to sell it, this was around 2016 or so. I was thinking like, okay, I wanted to kind of get preparation either to redevelop it or sell it. And so at the time, I didn't know anything about real estate. Like I was not like cell phones was my business at the time, and that's all I knew, right? Like I knew retail, I knew my other business I did. I don't know real estate. I never did real estate before, and so, but I thought myself like, okay, you know what, I can figure out like maybe I'll redevelop it and stuff like that. But it's a pretty good sized project. I hired an architect. We did some preliminary studies. We found out we could build 6 townhouses on here, and at the time, and another owner across the street actually did something similar. He actually built it, and he was selling them for $1.2 million each townhouse because it's LA, so LA is expensive, right? So,
Wow. Yeah.
so yeah, so I thought like, okay, I'm gonna redevelop this. I'll tear down my old house and I just redevelop this place. But I wasn't comfortable with the whole $3.2 million price tag. Right, it was going to be a pretty big development, especially as a first time real estate, investor,
Exactly.
right? Like a first project. So I figured, that, you know what, if I could find a developer to buy it, take it off my hands, and I get a good return. Of course, they have to make their return, right? So I understood that,
Right.
but I didn't have to take on this massive risk, right? That's at first like a real deal, and so
Crazy.
I'm like, let me see what's out there, right? So I put it on the market, and found a developer that wanted to buy it here in 2018 because I bought a house in an area that was gentrifying, right? So it wasn't like
Right.
really popular lit, but it was next to a city that was very expensive and popular. So I knew over time that area that I was in was gonna go up in value,
Yeah.
and that's what ended up happening. So I bought that house in 2011 for 320,000. So it just so happened it's the same price. I bought for $320,000 in 2011, and I put 3.5% down. And so
Wow.
I only put in like $11,000 or something like that to buy this house. Okay, and I was able to remove PMI because in 2011 was a time of like right at 2011, like 2012 appreciation started happening. So within 6 months, I was able to refinance that house and have no PMI. So I wasn't paying mortgage insurance or anything like that, right? So I only have $11,000 down in this house. I owned it. I lived there, and I sold that house in 2018 for just under 1.2 million.
Wow.
Okay,
Amazing.
and so when I sold my company that I worked really hard into. I sold these 2 houses and I compare them, right? I look, I'm like, okay, so I bought these 2 houses and I didn't do anything except live in them, and the other one I just rented out, and I made a crazy return. And then I look over to my company where I have managing 42 locations with 750 people, and I'm like,
Yes.
what would I rather do? Like, do I want to go back and do a bunch of that again? Or do I want to just, maybe there's more in this real estate thing that I'm
Yeah.
missing? Because I literally, like, with, like, if you do it right and it's within a relatively short period of time, a pretty substantial life changing event, right? Like, with
Yeah.
not a lot of money, right? Like, and so that's what led me to real estate. That's when I figured, like, you know what? And when we were negotiating with my like some of these other businesses I was looking to buy, I figured like, you know what, like maybe I want to do real. Let me try real estate. Maybe real estate is where I need to be, and that's what led me to real estate, because like I felt like there was more there that I was missing. Because I thought like some other investors like, oh, real estate is a slow generating thing where you make money over a long period of time, which is true, but if you do it right, you could actually make money within short periods of time too. And
Yes.
so like so I looked more into it, but now so I decided on real estate, but I didn't know what a like real estate is such a big ocean. I didn't know what sector I wanted to get involved in. So I studied every sector for about 6 months, right? So I looked into multifamily, and I looked into self storage, and like all the things that are out there, and it's
Oh,
just so much. And so I
yes.
studied every single thing. Like, do I want to do this one? Do I want to do
I
that one?
call
Like,
them shiny
yeah,
objects.
shiny
You know,
objects, right? So
like it's
it's like,
everything.
oh, it's so much. And so I
Yes.
narrowed it down, and I almost went with an apartment building, right? So I almost bought an apartment building in Tampa around 2019. Okay.
Okay.
So I was like, and it would have been great too, though. Like if I ended up buying that, I would have Tampa exploded, so it would have been great too. But I figured like, but I was looking at the return. Buying it was a 32 unit apartment building it is gonna require a tremendous amount of capital, right? Because I was trying to replace my income, like some of my income that I was
Right.
making before, and in order to do that, you need a lot of like you
Uh,
need to buy a big
yeah.
project in real estate, right? Because the
You need
returns
cash
are really the
flow. You need
yeah, you need cash
active
flow. Yeah,
income. I mean, multifamily is a long term. Like
exactly,
it's a
right.
patient game. It's
It is.
amazing,
It
but
is. And
yes.
so okay, so like I was kind of looking at this apartment building. I was gonna get it under contract, and then I was as I was talking with people because I was still kind of looking out what's out there, like doing research stuff like that. And I was talking with a realtor from Atlanta that said, "Have you looked into pad split?" And I'm all like, what's a pad split? Like what is that? Like I never heard of that before. And so he explained it to me, and I'm like, oh, I kind of like I remember before, like a while back, like referencing or seeing something about like co-living and stuff like that, but I didn't really look into it. It just wasn't the right time. It just so happened this was the right time. And so I decided, like, oh, let me take a look into it. So when I dug deeper into it, my mind just exploded, right? Like I was like,
Right.
what? So this was around like early 2019 at this point, and I was looking at co-living, and at the time, Atlanta houses were only like $100,000, right? And this guy was telling me, he's like, oh yeah, you rent out the rooms, you add the rooms in here, and you're gonna get like $50,000 a year in rent. I'm like, what? Like I'm buying this house for 100,000. You're telling me I'm gonna get rent of like 45, 50,000?
That's
That's just
amazing.
crazy.
Yeah.
Yeah, and so I'm like, well, this is way better than an apartment building, right? I just got to do more volume. But it's like, I mean, I only need a few houses. Like, I was thinking in my mind, like, okay, like 3 houses would generate like a huge return. So let me try it. Like, I didn't know if it was going to work. I didn't know like what to expect. I didn't know if it was going to be. So I figured, like, okay, and part of my history, so I used to be a financial advisor way back as well. And so one of the things I learned in the markets is always look at your downside first. So whenever I look at something, I always try and analyze the downside. And so when I was looking at it, it's like, okay, worst case scenario, let's say I try this thing and no one rents it, and like it doesn't work out, or I have I need to sell
Yes.
the house. Like, what is my downside? And at the time, that downside was only like the PITI was only like $700 a month, right? So I'm like,
Wow.
okay, I could swing $700 a month. You
Yeah.
know what I mean? Like, I
It's
set
worth the
aside some money.
risk. Yeah.
Yeah,
So
the
so
risk,
you
right?
you you purchase a
I
property
purchased. Yeah.
turnkey,
Well, not fully. No, well,
or
no.
you rehab it a little
Yeah. So
bit.
I had to do a rehab, but it was not a value add. It's not like a real big
Okay.
value add at the time,
Okay.
because so my thought process was, okay, let me underwrite the model, because then like I wanted as minimum, like least amount of variables first, right?
Okay.
So I didn't care about trying to like gain that extra like that appreciation yet,
Yeah.
because like my goal was just to replace my cash flow quickly, because I like at this point I was like about a year and a half or so without a business or any money coming in. And even though I did have some capital, if you're not like, if you're used to money coming in, it's not a good feeling when nothing's coming in. You like, you
Right.
want to
Oh
kind of just like
yes.
have some money coming in. And so I figured,
Yeah.
like, okay, let me just test this, see if it works, like, and then I'll just go volume, and then I could fine tune it later, right? Like I could get in the value
Yeah.
adds later
Resolved it.
when
Yeah.
I'm in the business, right? And so I just want to get my foot in the door, even though I know maybe I'm overpaying a little bit at the time for the house, or overpaying overpaying on my rehab, which ended up happening. I overpaid on my house and my rehab, but it still
Yeah.
worked out. Like I tell you guys my return on that house, and you'll think it's, even though I overpaid, it's still amazing. And so I bought that house for I think 120,000. At the time, I could probably gotten better deals if I know what I know now. But like I got the
Oh,
house for 120,000 in Atlanta, and I spent about, I think it was like 65,000 on the rehab, which I found over time was a lot, because houses were only 120. So like I almost practically
but
rebuilt the house for like 60,000, right? I mean, I should have really paid 30, but I didn't know any better, and I wanted a contractor,
I
because when I
mean,
told,
and you're doing stuff from California, right? You didn't
yeah, I did
move
it
to
all. Yeah,
Georgia. Come
no,
on.
no,
I
I'm
mean,
doing it from
that
From
yeah.
California, and so because what I did was I talked to Patsy, and I'm like, okay, I want who's a tried and true contractor that could get this built. Like I didn't want to deal with all the other issues and concerns and stuff that
Right.
other investors, like I just wanted to get up and running quickly, test the concept, and then just
Yep.
I'll figure out the rest later. Like I need 2 houses up and running. Like that's what I want. And so they told me, okay, this guy, but that guy is very expensive. But you know what? I ran the numbers still
Yeah,
work,
on the
right?
right.
Like I'm in
Yep.
at 150,000 and I'm bringing in 40, 50,000, 45, 50,000 a year on rent. Like, okay, let's do it. You know what I mean? The number worked. And so I got 2 houses up and running by, it took me a while because even when I was studying pad split or co-living, I spent about 3 or 4 months. Like I didn't just jump in right away because I wanted to make sure I understood all the risks and the business model and kind of everything I was getting myself into. So by the time I got the house up and running, because it did take a few months to remodel and everything, I got it up and running in around January-ish of 2020 is when they first went live. And so by the time COVID hit, so by March, when the whole country shut down,
Oh,
I had two
yes.
houses full. So I had about 16 members fully in the house, and I thought I was gonna have to evict everybody, and I thought the worst, right? I thought it was gonna be, oh my gosh, this is
Right.
gonna be a disaster. Like, oh my gosh, I'm gonna
Yes.
have to evict all these people or something. And then,
And go
but when
back
it,
to W-2, do whatever you're
yeah,
doing,
that's
or
yeah, and
being
I'm like,
you
okay,
know,
because
a
I figured
small
worst case, like,
business
okay, I'll just
owner.
buy another business that's like anti, like
Yeah.
that's that could survive COVID or something like that. I'm like, I didn't know what I mean. Like it was a crazy
It's so
time, and
uncertain.
yeah,
Yes.
and so and then so I figured, okay, I mean, I'm already in it. Let's see what happens for the next 3 months. And what ended up happening was they paid on time, and I didn't have to worry about any evictions. And that told me there's more here. Like this is it. Like I'm like, this
Yeah.
is amazing. Like I'm getting this crazy returns. Like, oh my gosh, like how much money will I make? I had like 10 or 15 houses. Like I need as many of these as I can. So by this time, it was already like late third quarter 2020. And so then that's when I made a determination. You know what? Okay, I'm going to buy a lot of houses. I'm going to buy as many as I can, and I'm not going to tell anybody. Like I'm just going to go and do this, and not going to tell anybody about what I'm doing. And like it just so happened all real estate investors had the same idea. For some reason, everyone wanted to buy a house in COVID period, and the market just went up. Right? It
Oh,
just went through the
okay.
roof. Like
Yes,
so,
I
I was
remember. Yeah.
chasing these deals alongside everybody else, like, but not doing co-living, doing
Right.
some, there are other strategies,
Yeah.
Airbnb or
A
long-term
lot of
rental
Airbnb back
or
then. Yeah.
yeah, so
Crazy.
like they, so they had these other strategies, and I was the only one trying to get like these houses for like co-living at the time. And
And
so
midterm too was very popular back
midterm was starting
then.
to
That's when
become,
that
yeah,
started
popular.
out. Yeah,
Yeah,
the
yeah. And
people talking
so
about it.
yeah, so I chased the market up. I've been buying ever since. So so the market, the
So,
strategy works.
moving forward to today, how
Yeah,
many doors do you have?
yeah.
And is everything under pet split?
Yeah,
You,
so I
you,
have,
you
so
oh,
moving to today, so I've been doing this for about 5 years now.
it's
I have
amazing.
150 doors now. I have
Wow.
150 doors. Most of the, well, of my co-living properties, they're all on pad split. So my co-livings are all on
Right.
pad split right now. I do have a few that are like non co-living that I own, but all my co-living properties are all on pad split right now, and it works. Like I use that platform because it works, and like they're good at what they're doing. Like what they do, which is filling up the rooms, right? Like that's
Yep.
that's what they're good
That's
at.
it.
Yeah,
That that
and so
that
I
that
I
should
do
be the
the
expectation, right? To
yeah,
just have the
yeah, yeah, and it
marketplace.
helps you scale, right? So you get the property
Yes.
on, they feel it, and then you continue growing, and so which helped allow me to kind of grow faster. And I do have a property management company now, and we manage 600 rooms here in Atlanta
Wow.
too. And
Yes.
so, and that's
So,
very
so
popular
Frank,
right now.
with all your experience owning co-living, managing co-living properties for other investors, have you seen any change, or like it's people that tenants, let's call, or
Yeah,
members,
yeah.
did it change? The profile change? Did the properties change? Did the needs change from 5 years ago, 6 years ago to today? Do you see any changes, or it's always been steady and growing?
Yeah, it's been like I've never really had a big issue in terms of like demand. Like I've always been able, like my occupancies, like as I added houses, have kind of been about the same. Now each area might be a little bit different, right? So like
Okay.
each geography. So but in Atlanta, I mean, it's been pretty steady. Like I haven't really had like a huge uh drop or anything like that. I mean, I have talked to hosts in like other markets that maybe had some difficulties, and that could be more market specific to
Right.
like maybe what's going on there or their house. But like for me, from my experience, in the most part, like in Atlanta, has been pretty steady.
Yeah, so
Yeah,
so for you, like if you were to say like, okay, so what is the profile of your tenant? What people that
yeah,
rent your rooms? Who are they? If you can just
yeah.
give us a.
Yeah, it's very broad. I have like actually a pretty wide
I
spectrum of
love it.
tenants. So like you have your seniors, because there are some that like I actually piloted a program with Padsplay before where we tried to do a house that was all like seniors and stuff like that, and
Oh, the
and
specific. I've
yeah,
heard of
specific
those.
seniors, yeah,
Yeah,
and
yeah.
it was great. It's just because Padsplit does a lot of their bookings through online, like electronically, so it was harder for them to fill
Right.
because
The
like not too many seniors are
technology,
familiar with
and I
technology, right? So
know. Yeah.
that was the struggle. But I mean, so I have seniors, I have students, I have like people that work in your people that ordinary people that work in the city, right? So like people that work in retail, that work in warehouses, stuff like that, and and I would say like lower to middle income,
Yeah.
people that just kind of want to find an affordable place to live, right? Like, like cost of living is so expensive now in a lot of the major cities, and people I talk to people where they wanted to move out, like a lot of kids right now, they'll be living with their parents or something, and they want to, they're old enough, they want to move out, but they just can't afford it, right? Like
Right.
apartment nowadays or
Yeah.
studios, like in some cities is as much as 50% or more of your income, right? Like they just can't
Yeah.
afford to
It's the
survive, and
entry, right? Like the
just to
barrier
get in.
is
Yeah, and
huge
yeah,
because like before, like for somebody that you talk about kids leaving the parents' house, going to college, coming back, getting the first job, right?
yeah,
Like for you today to afford at least buying or renting an apartment, a studio, it's you need to make at least 40,000, 50,000 to
yeah,
buy one,
yeah,
60,000 up.
yeah,
So how
exactly.
can like it's just amazing, and I don't think
Exactly.
it's gonna get any better, right?
No,
Like
it's not. It's
anytime
definitely not.
soon.
Yeah, not anytime soon. Because even on the, I'm looking at doing, construction now, and just the cost of construction, like you can't
Yes.
get it low enough, right? Like the only ways that you could do it is really housing, right? I mean, at least a quicker solution, right? Like maybe over time, over a longer period of time, they'll like get a little bit better. I think that's gonna happen through like smaller development, like smaller units and stuff like that, eventually.
Yes.
But like we're the quick solution to be able to provide housing to most people, and so so I think there's a huge runway for what we do and a huge demand for what we do. I think it's more that people don't know we exist. I think that's the bigger problem.
Yes.
I think people
Exactly.
just don't know, like, oh, you could rent a room, like
Yeah.
like because people know, like, okay, I get a group of my friends and then we rent a house and then we share it, like that. But they never
Yeah.
thought
It's
like,
been
okay, you
around
mean I could.
forever. Yeah.
Yeah, and so,
It-
but no one ever thought like, oh, I could just like search and they actually have rooms that I could just rent, like like I don't
yes.
have to find a group of people to like live together with, like I just go there, like. So I think it's a lot of people just don't know that that's even available right now too, and making
I
that become
know.
more popular, and then
It,
people know
it,
like,
it-
hey, this is an option, right? Like you don't
yeah.
have to rent a studio or a one bedroom, you could also rent a room if you need a place to stay that's cheaper or more affordable.
Yeah, and I started doing co-living, about last fall because
Yeah,
I'm a fix and flipper here in Atlanta. We
yeah,
had a beautiful property, would not sell for the price that we wanted. We said,
yeah,
let's hold it, and then
yeah,
we started doing co-living. And I mean, the first one as an investor, I was kind of anxious, right? Because you're like,
yeah,
okay, what kind of people they're gonna be living my property? What are they
yeah,
gonna do with my property? What is
yeah,
pad split? How far,
yeah,
how much management I need to put into because I've done short terms, I've
yeah,
done midterms, so I
yeah.
know hospitality, I know those things, and we know the rehab part. So our only anxiety is going to be like, okay, I'm going to come here and section out the entire house.
Yeah,
We went from 4 bedrooms to 7, built another bathroom. So
yeah,
how we're going to do all of this how about if it doesn't rent? What if,
Yeah.
like, there's so many
Yeah.
anxieties? And I know
Yeah.
there's a lot of people out there that are buy and holder like me, doing things. And if you buy properties to do long term in
Yeah.
last 2 or 3 years, you're not cash flowing. I know, because
Yeah.
I bought a few properties and it's not cash flowing. If you're
Yeah.
doing loans, it's, like traditional loans, it's very hard to cash flow. And then you get co-living, and then you start seeing the possibility of, the income, and the, I mean, our first property, that one itself, when it's fully booked, we make about 3,000 a month
Yeah.
net.
Yeah.
That's net. That one
Yeah.
was good. That's what I tell people. Like, every property is gonna be a little bit different.
Yeah.
And then we got our second one. That one we do 2,000. Then we got our
Yeah.
third one and another 2,000. So we sitting here 4 months, 5 months later with a cash flow, like real cash flow of about 6,000 a month. I
Yeah.
mean, when can you do
I mean,
that?
three
And then
properties you
keep
could really.
properties.
Yeah.
Yeah. Three properties. If
Yeah.
that's what you want to do, that's what it takes for you, maybe,
Yeah.
Franco. Back then you say, okay, 3,000 is enough for me to do my living today. I can do this, like it doesn't require a lot. It
Yeah.
does require learning, because there's a lot of moving parts. And I want you
Yeah.
to tell me, like, because you've been doing so many properties, I'm sure you
Yeah.
have a good system, or
Yeah.
what you see investors doing wrong,
Yeah.
from your experience. How, can you dig into that a little bit,
Yeah, no, definitely, definitely. I mean, because there are a lot of steps. Like, it's not like your typical long-term rental, right? Because if you do a long-term rental, you come in, okay, you just you do the renovations and then you put it on the market, right? Like,
Yes,
it's like
yes.
it's like, okay, one step here, boom, then you're already on market.
Y-
With us, it's a little bit more. There's a little bit more involvement, right? Because you want to choose the right location. Each market's a little bit different. So, like, do you need to be near public transportation, right? Like, does this house, like, how many rooms am I able to put into this house, right? And so, in terms of maximizing, right, because you have to balance the cost and things like that, and you want to make sure you do the rehab correctly, and then you have to decide on the furnishings, right? Like, okay, how am I gonna
yes.
furnish it, right? Because you don't necessarily have to go like Airbnb route, right? Like, I'm not
No.
necessarily putting accent walls and putting, adding all these nice little amenities
Lights,
into
and
your
yeah.
co-living. Yeah, you're not making it like a high-end co-living property, right? Because it depends on your clientele. There are hosts that try to do that, but it just depends on your style. And then financing these, like refinancing them, making sure you're doing it right. So understanding the strategy. And so there's a lot of little things that could go wrong that you want to keep in mind, right? Because if you choose the wrong location, or you do the rehab incorrectly, you might kind of find yourself stuck at a certain point, or overpaying, or the numbers, like when you underwrote were find out incorrect. You know what I mean? And you thought you're gonna make
Right.
a certain amount of money, but find out like, oh no, you didn't. And so those are some of the issues that you run into. Me, I like to, so my strategy of choice right now, and it does change. So over the last 5 years, I actually had to change my strategy like about 4 different times,
Yeah.
based on
That's
the market
nice.
environment.
That's nice
Yeah.
to people to understand. It's fine. It's fine to change, to
Yeah.
pivot, to
Yeah.
change even the way that you buy, like, it's
Yeah.
fine. It goes with the economy.
Exactly.
Economy
Because
doesn't go like this. It
yeah,
goes like this. So you gotta adapt. That's
exactly.
that's that's the best way to do it.
You have to adapt to like what's happening. Like the last few years, a lot of investors that maybe haven't bought a lot of properties don't know, it's not really been that easy a market, right? Because
Mm-mm.
we've been to a period where we had the lowest interest rates, to the period of the highest interest rates within the last like 40, 50 years. You know what I mean? Like, we went from the lowest to the
Exactly.
highest within like a 5-year period,
Yes.
within dealing with also high prices. And so and the market changing, you have different markets that are shifting. Like, you have markets like Austin that had the big drop, or Washington DC having a big drop. You have markets that are
Yes.
going,
And
so like they're not
Florida
all the
too,
same.
right?
In
Florida,
Florida, yeah,
Texas,
Florida,
and
and they were having insurance issues. So, like, there's a lot
yes.
happening right now
Yeah.
that a lot of people don't know. And so you have to kind of adapt to what is happening. And what's great about what we do is the opportunity is so big that you're and it's so flexible that you could adjust to what's happening, right? You're able to adjust. Like I have, so like my one of my houses, the lowest interest rate I have is 3.75, and then my highest interest rate I have is 9%. Right, on the
Mm.
30-year fix. Okay, that's not a hard money loan. That's like a 30-year fixed loan. Okay, and so I bought
And it
houses all
works.
throughout, and
And
it
you
works. Like
still make money,
I still have
right?
it, right? Well, no. Well,
Yeah.
so on the 9%, it's a different strategy, and that's where you have to kind of know, right? Like I
Okay.
bought that, so that one, I am negative cash flow on that. I am negative about
Oh,
five
you
hundred dollars a
are.
month. Yeah, I am a negative cash flow on that, but because remember, but it's in a market, so that one's in my Florida house, but it's a high appreciation market.
Okay.
So my strategy is a little bit different. I'm in a different position too because I'm also taking advantage of the tax write-off. But that
Right.
I adjusted the prepay. And this is where strategy comes in, right? Where like I did a shorter prepay. I could refinance that now and be profitable now. Um, but I'm gonna wait a little bit because the prepay ends. I shortened the prepay ends in December,
But
so
is
I
that a
could
co-living or long
that's a
term?
co-living. I turned it into because it was supposed to be a midterm rental,
Oh,
but it didn't pencil. By the time I was done, the market changed. So this is where like, oh, okay, I'm gonna do it a co-living. So
all
as a
right.
midterm rental, I'll be losing my shirt, right? As a
Wow, I
co-living,
know.
I reduced my loss because I could sell it. Like I could have sold the property, and because I bought that property for 260,000, I put 50,000 into it. It appraised for 550,000. So I could
Wow.
sell it. Like I could sell it right now and make
Yeah.
money off it.
When did you
But
buy it? Like
I
two
bought it
years
last year.
ago?
No, no, no.
Last
I bought it
year.
last year. Yeah, I bought it last year.
Okay.
Yeah, I bought it last year. And so, but I like the area. I like the potential. I wanted to hold it because then what I learned
Right.
was like because of my initial start, I started out on the right foot in real estate. I learned that holding properties like it's nice flipping, it's nice holding, like you make these little spreads, but if you're gonna make real money,
Yep.
like
Wells.
real wealth, you hold
Yep.
it. You
Yep.
hold it. You hold as much as you can, and that's why I hardly sell any of my properties as much as possible. I just keep all like I try to keep all of them,
Yes. I
And
love that.
so like now I have about almost 30 properties now, and I just try to hold all of them, right? Like
Yeah.
because over time appreciation. So with this one, um, I might refinance it. I'm waiting for the right timing because I want to see kind of right now I could get rates as low as 6 with some of the brokers I talk to right now.
Yeah,
And
and it's
so
coming down,
yeah,
right?
so I have a 3% spread.
Today,
Yeah,
today,
today.
March the 19th.
Yeah, and
Yes,
that's
it
why.
is
So if I
coming
go for
down.
9 and I refinance it at 6, I'll be cash flowing nicely. You know what I mean? So
Awesome.
yeah. So but
I'm
it's again
hoping when the
strategic.
refi time comes, and
Yeah,
everybody's
when the right time, like
refi.
I'm
Yeah,
because my
yeah,
prepay ends in December, so I'm not in a big rush. Right, I just let me see where the rates
right.
go. Right, like
And
you know,
it would be worth for you to refi now if
yeah. No, I could. Yeah, if I really
paying
wanted to.
for
Yeah,
the
yeah,
penalty, right? The
yeah.
pre penalty,
You
yeah,
can. I mean, but
prepayment if you
like it's
want
only a few
to.
months. Yeah, it's only a few months because this one has a
It's
flat
right here.
prepay. So this one's like a 5% flat. So I might wait
Oh,
out the few.
gotcha.
Yeah, but this is where like strategy comes in, right? So, but anyways, so like with that one, it's a different style, and I'm in a different position. That's why like when I work with some investors, your goals, your plans, like your situation, that all plays a part, right? Like, because then your goals might be different than my goals, right? Like my goals now are different, right? Like I don't buy houses for cash flow anymore because I have a good amount of houses that cash flow, and so
Yeah,
I do it more
nice.
strategically. I need tax deductions, and I need,
Right,
I need other things that like other investors may not necessarily need, right? Like I need to buy a
right.
certain amount of houses every year for my taxes, so like so I'll buy things differently than like you should, or
But
another
Frank, like
investor might buy.
from your experience, what would you tell like somebody's out there, like maybe a buy and hold investor that
Yeah,
only does long term and
yeah,
want to try something, or maybe somebody that has been doing Airbnb for a while, and Airbnb has been kind of like in a down
yeah,
slope, in
yeah,
a lot of markets. Or, even middle term haven't been, because the problem with those, especially middle term, long term, is the vacancies,
yeah,
right? If my tenant leaves on my long terms, because I do have long terms in Atlanta too,
yeah.
I mean, it's a month, 2 months.
I
That
know, I know. It's
kills
painful.
all my
Yeah,
net
I
profits.
know, I
So
know.
for those long term, let it sit, put it
Yeah,
there. But for people that are really looking for cash flowing properties,
yeah,
why should they do co living? I mean, we
yeah.
don't want
So
to tell them, but we
yeah.
do want to tell them because it's great.
I know. So co-living, like, so first is it's worth a try, right? Like, so if I have a portfolio, let's say I have a few long-term rentals already,
Yeah,
you're in the best position to try it,
yeah,
right? Because then you probably have a lower cost basis. Like, think of it, like your risk is so much lower than, like, if I me on a new house that I'm buying, right? My cost is much higher than you, that if you bought a house like 10 years ago that you got as a long-term rental and you have like extra rooms, like
exactly.
one
That's
room might cover your
very good
cost, like for your
point. Yeah,
PITI.
very
Like,
good point.
yeah, you have the least amount of risk, right? And if it doesn't work, then just put it back as a long-term rental. Or you don't like it, put it back as a
Yeah,
long-term rental, and so you could always start small and see if it's for you, because it's not for everybody. Like, the truth is not for everybody, right? Because you are really more involved, right? There is more to
because
it.
it's a business,
It's a
right? Like
business.
it's
It is a
not
business.
something that you're
Yeah.
gonna put there and then, for example, pet split, which is one,
Yeah.
what it is, what
Yeah.
Airbnb is for short terms. Pet split is the only
Yeah.
one now, right? That does the
Yeah.
market. That's a place where people go to rent by the rooms,
Yeah.
but they're not going to be managing the property for you. They're not going to
No,
be
no.
managing the you should be doing all the screening.
Yeah.
They're going to
And
collect payments, right? They're going to
yeah.
screen. They're going to do their screening. They're going to be
Yeah.
there to support.
Yeah.
And then I tell people all the time, like, if you go into the pet split and you put yourself as a host, or and you start setting up an account, there's so much learning there as
Yeah.
far as the management part, that
Yeah.
like, people don't realize it, and they start
Yeah.
looking at the map, start seeing what areas people there's more co-live, and see if that area would be good for you. Run your
Yeah.
numbers, right?
Yeah, I mean,
There's a
with
lot of
me, I,
stuff.
I, I actually experimented, like, in going into a lot of the areas, and again, each market,
I love
each
that.
market's
I
different.
love
But
the fact that you experiment.
yeah, because then, like, when I started, there was no information. Like, I didn't, like, the only way for me to learn and know is for me to do it, right? And
Yeah,
like, doing a lot of different businesses over time, you kind of gain, like,
yeah,
you gain you learn
yeah,
how to kind of analyze. I knew my risk before I do it, because then I felt my upside was high, right? Because if I tried this market, it's like, oh, that works, I could put 5 houses there, right? Like, oh, that market work, I'll
right.
put 5 houses there, like, so. But then my downside's limited, right? If it doesn't work, then I'll just sell the house. It's because
Yeah,
it's not like I lose my house, right? Like, I still own my house. Like, if it
no,
doesn't work, then I just sell the house. You know what I mean? Like,
exactly.
okay, I take a little loss or whatever, but that's how business works, right? Like, if you're gonna run it, like, but then I learned a lot of different things along the way, like how to maximize your rehab, how to choose locations, like like, how important is parking, I mean, like,
Yep,
all these different things that I needed to kind of learn. And the only way for me to learn, because no one's telling me, like, even Patsplit didn't know. So, like, I had to do it because they're just a platform, right? Like, just do the marketing, that's all they really know, and do the rent collection, that's it. So I had to kind of figure it out all on my own. And so I experimented. I have big houses, small houses, like, I have houses that are 10 bedroom, 4 bedroom, like, I did a lot of different things to learn as much as I can about them. Even until
what,
today, I'm still
yeah,
experimenting with it.
what seems to be working for you? Like, I know you heavy
So,
here in Atlanta
and
market.
I know, like,
How big of a house, or
and this, I know you guys might not like this answer, but, like, everything works for me.
like,
Yeah, it
no, but
all
I
works.
love
So,
it. I mean, at the same
and
time
I'll tell
that
you
people
why.
might
Yeah,
hate, but it's what there's not to love,
yeah,
right?
and this,
There's not a
yeah,
recipe that you say, use this recipe here, it's
no,
gonna
and
work,
and that's
right?
what's
Like,
so
there's not
amazing
such a
about it,
thing.
right? Like, it really comes down to, as long as you do the underwriting correctly and the numbers work,
Yeah.
like, it works. You know what I mean?
So
Like,
underwriting is still the same, right? The underwriting
yeah,
for,
like, so
of
you can't
course, is
still
gonna,
overpay,
but
right? So, like,
yeah,
the basic economics still have to work, right? Like, oh, you can't get a
exactly,
4 bedroom and pay $500,000 for it, like, then and then rent it out for like $1,000 a week. Obviously, the numbers don't work, right? Like,
right?
you, as long as you do it and then things make sense, then it works, right? Like, because then
Yes.
the demand, like, because if you think about it, right, like, because then when I started out, I was starting out in, like, the D class neighborhoods. That's where I started, right? Because then,
Oh, yep,
yeah, I was in the C, D class neighborhoods, because
yep.
you would think, okay, low to mid low income people, like, where are they? Oh, okay, the C, D class neighborhoods, right? So you got to go where your demand is. But one day I was wondering, does it work in the A, B class neighborhoods? Let me try,
Oh,
right? So I
tell
put a
me
house in
about
the A,
it.
B, and
Ah,
guess what I found out? It works there
ah.
too. It works there too.
So,
Why?
and
Because
who are
think about it.
they? Yeah,
Well, because
but
if you think about it, like, okay, if you have somebody that works in an A class area, right, very expensive houses,
yeah,
well, where are those people gonna, like, the people that work at your Starbucks, where are they gonna live? The people that work at Chick-fil-A, or at all the restaurants or Target, where do those people live? They live far away. They have to take a bus
yeah.
in. They have to go there. Like,
Oh my
you
God,
know,
teachers
yeah,
too. The
teachers. Like,
same
so
thing.
like, wouldn't they want to live closer to their work? And if there's an option for them to live closer to their work, that they would. And I
Yes.
found the answer is yes. Right. The only reason why they don't do that is because they don't have an option. They don't have a choice. And so, there's demand there too. There's demand
But
everywhere
but
right
but
now.
Franco, do you, because I'm, like my properties, at least in Atlanta, my buying holds are all in areas A and
Yeah.
maybe B of
Yeah.
my long terms.
Yeah.
But I never really thought about, because you were thinking about, hey, if you buy and hold invest, why don't you make one of those properties into co-live and see what happens? I start
Yeah.
thinking about it, but it did not underwrite
Yeah.
because I
Yeah.
get such a good rent, but those are properties that I
Yeah.
bought,
No, and
that
that's why,
I've had it for
and
20
that's why,
years, not
yeah,
the
and
ones
that's
that
why
I bought in
you,
2 years.
because you
But
have to mix it, right? Like, it's not every house makes sense to do as a
yes,
co-living, right? Like, you gotta, like, hey, like, if I could get, so, like, and I'll be like, I'll take you like how I analyze it, kind of like what you're analyzing. Like, if I could get a house where I don't have to do co-living, and I get, let's say, $3,000 a month rent, let me just say, right?
yes,
And then I have
yeah,
that same house and I do it as a co-living, and I still get $3,000 a month rent, or maybe 3,500. I might just keep it as a long term rental. I might not do it as a co living, because
yeah,
the extra 500, do I want to deal with more of that work? Do I want, like, this one is just one family? Like, you could balance that. Like, so you don't have to
yeah.
make every single thing co
No,
living.
but
And that's why I have some houses that are like not co living too,
but here, here's
but
what is impressive. Those houses that I have lately, I've owned this property for like 10 years, 15
yeah,
years. Like my mortgage is low.
yeah,
I haven't done any of the refi on those because I want to,
yeah,
I want to exit, I want to do other things.
yeah.
Anyways, but those properties in the last 5 years, you know what happened?
What happened?
It's kids, like young professionals that make 80,000, 60,000, find the jobs after they go to to UJ,
Yeah,
come to Atlanta, they get their buddies and they live right in the city. Like
yeah,
my properties are right here, and that's the way it's been on
yeah,
all of them,
yeah,
all guys, and then
yeah,
one moves out, and then we do an amendment for the other one moving back
yeah,
in. But of course, I haven't done build more rooms and make it. But they
yeah,
love it, and I'm like,
yeah,
it's working for me. It's a little bit
yeah,
different, but it
yeah,
is a form of co-living, right?
yeah, yeah,
So I see the demand is there, but
yeah,
I don't see. So you're saying that you've done some on class A. Are
yeah.
those tenants coming from pet split, or are you doing a
Those
different
are on pad
marketing?
split. Yeah, no, no, those are on pad split.
Wow,
Yeah, I do them on pad split.
wow,
Yeah, they find them on pad split too. Yeah,
that's
and that's,
amazing.
it works there too. It works everywhere, like all over it. I have houses all over Atlanta now. It works in all the
That's
markets. And
that's so
so,
awesome.
yeah, I mean, because I mean, if you just think about it, right? Like, because like even here in Los Angeles, we have a housing problem here in Los Angeles, and like, I mean, it's so expensive now. Like, a one bedroom here in Los Angeles is like over $2,000 a month. For
Yes,
one bedroom. And
crazy.
in some areas it's 3,000 a month, and it's crazy
Wow.
for like a little apartment that's like a one bedroom apartment. Like, how are people gonna
But are you doing
afford that?
co-live in California or
Not yet. So
now?
Padspit
Yeah.
has opened up Los Angeles. They did open up here.
Oh,
So it is, I have a few plans on something I'm working on doing here for Los Angeles. I think I might do it a little bit differently. It's still co-living, but I think I have a different plan for LA. You have to do it kind
okay.
of a little bit differently, because LA does have a lot of regulations and things you have to comply with, but they are open to it. LA will allow co-living here. And so
Yes.
you just got to do it right. You just kind of have to
Yeah.
do it a certain way,
But
and
but
so.
but so tell me something that you see, like share something that you see, because you teach, right?
Yeah.
You mentor people. What do you see, like the mistakes that when you talk with investors? What are the mistakes that you see they making the most?
Yeah, so the biggest mistake I see, the number one most common mistake, is their underwriting. Like,
Okay,
so
so
they
all
think
goes
they
back to the underwriting.
yeah, because then
Yes.
like that's the most important, because that's the hardest one to fix, right? Because like
Yes.
you choose the wrong property, or you buy it the wrong way, or you paid too much for it. That's hard to fix. Like you can't. There are ways to fix it. I've come up with this
So so,
solution,
so
but
yeah,
it's hard to
like
fix.
for you, like if there's anything like a napkin math, is there
Yeah.
anything that you develop that say,
Uh, so
or
it's pretty
it's
basic. I
and
mean, it's pretty basic. It's still the same, because where the mistake comes in is like, for example, like they think they could put more rooms than they thought. So like, oh,
yeah,
they underwrote
okay.
it with 9 rooms, but then but they can
Oh
only do seven
shit.
rooms. Yeah, that's a
They
major
bring the
problem.
they bring the contractor in,
Yeah,
because and then they're like, oh
yeah,
no, we not able to
yeah.
do
I mean,
this.
so it's always like on the underwriting, because then like they don't. I mean, to be fair, they don't know what they don't know, right? Like you don't
Right.
like. So if you're doing it for your first time, or maybe you did some other type of rehab, like you don't know, because you've never been in this business before. But you know what I mean. So like you like so it's not their fault necessarily. It's a beginner mistake. So you're paying tuition,
Yeah.
right? Like because you don't
Yep.
know what you don't know, and or sometimes I see them where they overpay for a property, right? Like it's like, oh, it's going to generate all this cash flow. They overpay, and then that market, they can't get the rent that they thought they could rent. Like
Yeah.
I have somebody now that is in that situation,
I
and they've been
know,
working with her,
yeah.
helping her, and so
It's a little complicated, right? Because
yeah, yeah,
you need to have resources.
yeah,
It's nice to have a good networking. Like,
yeah,
I tell everybody, if you're walking through a property, get a contractor to go there with you until you
yeah,
learn. Go
yeah,
to Pet Split page. Even if you don't want to use Pet Split, but go there as a guide to see
yeah,
the rooms, what they require for rooms, and then you
yeah,
can have an idea, right? So
yeah.
a lot of
Because
those things can be, like as long as they know and they use their resources, it could be avoided, right?
yeah, yeah, yeah. You can minimize at least those mistakes.
Mitigate, yeah, that's
Yeah, yeah. Because sometimes it surprises on the way, but at least you're able to reduce like the big ones, right? Like that's the big one. Like
yes,
because you can't, like if you overpay for a house, you can't fix, like it's hard to fix that, right? Like it's
yes.
you're kind of
Oh
like
my
stuck there.
goodness.
Yeah,
Yeah, because
but
it's
uh
very important. I think the most important process, like everything real
yeah,
estate, is
yeah,
buy. When you
yeah.
buy, that's when you make the
Buy.
money. And
Yeah,
underwriting, right? Underwriting is
yeah.
not
The
only the
underwriting.
numbers, guys. It's just
Yeah,
like find out, how you're gonna get the business plan, how you're gonna make that getting to the cash flow that you wanted to do. And
yeah,
then like using other people's money, how do you do that? And
yeah,
it's
yeah.
and
Okay, well
there's
that also adds another level to it, because like and that's where knowing the strategy comes in. That's why when I kind of
yeah,
work with some people, like, and I help them kind of figure out the strategy, because like I can get 100%. So like right now, like I have lenders that could give me 100%. Like so I get 100% purchase, 100% rehab. So I could get full 100% fully
yeah,
financed.
nice.
But there are repercussions to that. It sounds great, but in a high
But
interest rate environment, it like I actually still opt to putting in capital, like put in money in the deal, because when you do full leverage, you have those people like, oh yeah, do full leverage. It's like, oh yeah, don't use any of your money. It sounds great, but then you're actually paying a lot for that. You know what I mean? Like
yeah,
when I do a deal like that's fully leveraged like that, you could easily give up $50,000 in equity. And it's not equity, because when you refinance it, it's actually your money. So you're actually paying like $40,000, $50,000 because of all the little fees and then the closing costs and like all like doing it
yeah,
twice. Like
that's
so
so true.
you gotta, like, I actually went the direction where now I just use private money lenders. Like I have like a line, I just pull and I just pay it all cash. Like it's less, like I actually use less. I mean, it's leverage in a way, but a little different type of
Yeah,
leverage mixed in with like more equity, some of my own capital, and just because of the environment, it makes more sense. But that's where you
I
kind of
know.
like adapt to like what's
But
happening. So
that's the best. Like for us, it's been the best model, right? Do the
yeah,
rehab, force appreciation, refi. I mean, you can come in with little money
yeah,
and
yeah,
leave money, little money on a deal, right?
yeah, yeah,
And but at the same time, that's that if you don't know rehab, if you don't know how to forecast a lot of stuff, it's not for you. Maybe you should go with a normal loan, or do a creative, do a sub
Yeah.
two with the lower entry, with good PITI, so you
Yeah.
can get into the business, and then you can kind of be more, start trying other things, and then
Yeah.
getting more into the business. Because if
Yeah.
you get into the business like, oh, let me rehab this, let me do the refi, and then even for the refi there's a lot of stuff that we need to do to make sure
Yeah.
the loan goes through, so
There's
they
a
don't
lot of
charge a
different techniques there.
9%, a
Yeah.
12%. There's a lot of stuff there that
Yeah.
we've learned, and I do loans too. So,
Yeah.
and then how to utilize private money lender, how to get out
Yeah.
there and have a nice product, and but everything starts from your first one. That's what
Yeah.
if people are doing your first one, do your first one, learn as much as you
Yeah.
can, get out there, use your resources, pay people to help you if that's the case.
Yeah.
Like, we do a lot of stuff here in Atlanta, do rehab, we do setup, we have the whole
Yeah.
process,
Yeah.
property management. You have property management in Atlanta too, in
Yeah.
case they need more, or wait
Yeah.
until you have a few properties and then hire property management.
Yeah,
So
exactly. Especially if you want to, like, what your goal is, right? So if your goal is like,
yes.
so before I even had property management company, I used a different property manager when I was first starting, because my goal was acquiring. Like, I didn't want to
Yeah,
spend time managing, because there's a lot of time that goes to managing these,
you're
and
right.
so, like, I wanted to just, and at that time, because it was like COVID period, I knew appreciation was gonna come. I knew, so I didn't want to, like, I just head to the ground and just get as many deals as I can, and I pass it to them, and then you manage it,
Yeah,
right? Just boom, boom, boom,
you
boom,
worry about
and so,
scaling. Let me
yeah, you
build
just, because
build Yeah.
like, I knew what my business was. My business was acquiring assets and then making money off the appreciation and cash flow. That was my goal, right? And as long as the
Yeah.
numbers made sense with the property manager, I didn't care about anything else. And
Yeah.
so, so for those type of investors, property manager makes sense. If you're looking to, like, no, I wanted to kind of replace my income, have a little bit something on the side or whatever, get a couple
So that's
houses,
your job.
then
Yeah.
then you could do that, right? That you don't need a
Yeah.
property manager, you could just manage it yourself, and if you want to. But we have a lot of clients that are also like doctors, professionals, like they just want to own real estate, things inside, don't want to deal with it. Those are the ones that, like, I think fit us. But we also able to help a lot too, because we have a lot of information. We manage a lot of houses in Atlanta, at least, and so,
Right.
and you could do the same even with other a good property manager in other states. But, like, there's a lot of information we have. We know what rates you could get. We know kind of like what the demand is. We know
Yeah.
what the problems are. Like, we have a lot of info, so we could be a really great resource for our clients that
And
are
Frank,
looking to build
when you're
portfolios.
talking to your client for
Yeah,
the PM side, that property management, what do you tell them? Like if they doing the pet split and then hire you guys to do the
yeah.
people management, the property management, what is the percentage that you tell them when they underwrite the deals?
Oh,
Like
so they take into account pad splits
eight
fee, which
percent,
is
right?
8%, yeah, plus the
Yeah.
booking fee. And then ours, we actually do ours differently. I actually don't charge a percentage, so we charge by the room. So, and
Okay.
it's a little bit different. And the reason why we do that is we don't like to make things complicated for our clients. We like them knowing what the cost is upfront. So we charge $75 per room for our management, but it's not just the management side. We included the, because we wanted it to be predictable, so kind of roughly every month, like, what you're spending. So we also included what do we call it, pest control. So we have pest control. Quarterly pest control is included as, like, part of our cost. Like, a lot of property, because what happens is a lot of property managers, they'll charge you a percentage, but then have all these other stuff, like they charge you that you didn't know, right? Like, you don't
Yeah.
know how much it costs for this, how much it costs for, like,
Yeah.
so when you get your statement, you don't know, like, you're always surprised, like, oh, that's, I thought I was making a lot more money than what happened. Like, I we don't like that. Like, we like clients knowing kind of like what's happening with their properties and portfolio. And I think a lot of our clients, based on the growth that we've been experiencing, we've been bringing on a lot of clients. Um, they like that, right? Like, it's just predictable, it's easy, and we're more investor focused. So includes the pest control, includes the room turns. So, like, if a member goes out, a lot of property manager would charge you every time they send out somebody to turn a room. So we
Yeah.
include two room turns. We include monthly visits to the property. So we visit the properties every month,
Wow, that's
which is very
good.
important in these type of
Yeah.
properties. Yeah, it's much more hands-on than a long-term rental. And
Oh
so,
yes.
so we check all the rooms. So in our agreement, we check all the rooms every month, and we check the common areas every month. So if we see something that we need to take care of right away, or we have a need to have a serious
Yep.
conversation with the tenant
So
right
so
away,
so you so
we
you
identify
email
them.
everybody, let them know, hey, we're gonna be doing our monthly maintenance walkthrough,
Yeah,
and then so they can, you guys can go into their rooms and
yeah,
do
and just
your,
look.
yeah,
Yeah,
just
yeah,
yeah.
and just check, because we found had situations where there's like a hoarder in the room or something like that, like stuff
Wow.
that we don't want to keep in the house. And so if you don't visit the house, then you're never gonna know. And so
Yes.
so we want to catch those right away.
But for you, like for overall, like for underwriting, anybody underwriting that doing pet split plus a property management, would you
Yeah.
say like would be what, 12% of
Yeah,
the,
so if you
when
want
you
to like
underwrite
underwrite with a
monthly?
percentage, I think a good
Yeah,
percentage is like around 14. I think
40.
around
That's right. I do mine
14%.
15.
Yeah,
Yes,
14
because
to
even
15
though
is
we
good.
do the property management, because we have a
Yeah.
business, but I still wanted to make sure that that
Yeah.
number is there,
Yeah,
and
I
then
would say around 14 or 15%
kept
is perfect for that, and it accounts for all that
the
cost.
the
Mhm.
yeah, the 10 days that pet split get from the host, right? The first
Yeah.
10 days,
Yeah,
yeah,
including that. Yeah, including the 10-day
yeah.
booking fee. Like I think that kind of is a good percentage. It's not exact, but it's good enough. Like you're not going to be that far off. Like it's you won't get you in
Yes.
trouble. Like
That's
that's a pretty safe
that's what
number.
I hear. That's a
Yeah.
pretty
Hmm.
good. Yeah.
Yeah,
But
that's a good
it's
number.
been fantastic. I mean, we've been
Yeah.
talking. I will talk all day long. I want to ask you a lot more questions,
Yeah.
but it's been amazing. How can people find you, Franco? And I'm
Yeah,
gonna put on the
definitely.
notes, on the show notes. But
Yeah, please. Yeah, yeah. So,
yeah,
thank you. I appreciate it being here. You could find me. I have a website, cohousingsherpa.com. So if you're interested, and one thing I do too, if like you wanted to do co-housing in Atlanta, like Atlanta's my main market right now. We are
yeah,
looking to expand into Texas and Florida right now too. Actually, both
nice,
on the property management side. But there, if you're interested, like if you want to get into co-housing or you want a second opinion on a house, I actually do that right now. Where I could give like a second opinion. We could go deep dive on a particular house for like an hour, or we could kind of talk about co-housing for an hour or
so,
two.
so those are consulting fees, right?
Yeah,
That you
yeah.
put in,
So
everything's on the website
yeah, it's all on the
to do
website. I
those.
do that there. I also like if you want to do like something deeper where you want to really build a portfolio, kind of work together in co-housing. I have that too, where I have a mentorship where I do that with some people as well. You could also email
Amazing.
me at Franco, Franco at cohousingsherpa.com, and
Okay.
you could also reach me there. Yeah,
Okay. Perfect. Fantastic. Thank you so
yeah.
much for your time.
Thank you. I love being here.
Okay.
Thank
Bye,
you.
guys.
Bye.